Roku shares are down 23%. The company had a weak outlook, a miss on the top and the bottom lines. The streaming device group cited challenges posed by slowing ad sales due to the current macroeconomic environment. It reported a net loss of $112 million in the second quarter. As you can see, on a per-share basis, that was 10 cents wider than estimated. And remember when Roku said it was going to diversify its revenue stream by leaning more into advertising, and the market was pretty happy about that strategy. Well, it's good when things are good. It's not so good when they're not.
This was terrible. And right off the jump, I have to take a little issue here with Roku founder and CEO Anthony Wood. Hops on that earnings call yesterday, and within the first 5 minutes is telling the street that the fundamentals are strong. Quote, my apologies, quote, the fundamentals are strong. No, they're not. Your stock is down about 25% here in the early going. It is telling you that the fundamentals of your business are starting to worsen. And I know the team over there thinks that we're all going to be streaming stuff over the next decade, and they might be right. But for right now, the ad business is slowing down. TV sales have slowed. Roku sticks and players and content gets installed in those TVs, and that is a major problem. Now, we heard that from Best Buy. When that Best Buy earnings warning hit during the week, that was the ultimate tell that this quarter from Roku was going to really stink, and it did stink. And now they also pulled their full-year financial guidance because they have no visibility into the back half of the year.
Well, what he said is exactly counter to the second and third sentence of their own statement and their own release. Consumers began to moderate discretionary spend. Advertisers curtailed spend in the ad scatter market. TV ads bought during the quarter basically is what that means. And they expect those challenges to continue in the near term as economic concerns pressure markets worldwide. Also, these streaming hours, the amount of hours that people are engaging with this platform was down in the quarter by, they'll say 0.2 billion. That's 200 million hours that were not streamed during the quarter. And for every single user, that means there was at least maybe 1 or 2 movies. That's 3 hours per every single, 63.1 million users that they have right now. 3 hours per user, not spent on the platform. Where else do advertisers put some of that money? And does that ultimately flow into a different streaming competitor, Netflix, who's launching their own ad tier very soon as well?
Right, that's a very good point. I mean, for some reason, I have a Roku, and I say for some reason because my TV doesn't need a Roku. Well, is it the Roku platform?
It comes pre-installed.
It comes pre-installed.
But it wasn't Roku. No. I bought the Roku separately for some reason. But I have a smart TV, so I don't really need the Roku. So
You're double Roku'd.
So I don't use the Roku.
Roku Square.
I don't know what I have, but I guess my point is that many of the new TVs now, you don't need the Roku. It's all on the TV already, right?
Well, you know what investors have? 25% more losses here in the early going. And you look at the stock, you try to assess, well, what is this company worth? And it's completely unclear. That's why the overall company, it just might be untouchable. It's not a stock call, it's just a reality because you cannot, I think, paint a picture in your head that there's a catalyst to get sales and profits re-accelerated into the back half of the year. Everything that played out in the second quarter for Roku might just get worse in the third quarter and fourth quarter. That's why they're pulling their full-year guidance.
Well, and so that comes back to the hiring. They said that they're going to be slowing or at least decelerating some of their headcount growth as well, which is a theme that we've seen. And rightfully so, probably at this point in time. If you're seeing this type of reaction in the stock, investors clearly are looking for you to trim costs, but much more aggressively. And it'll be interesting to see if we watch that directly from Roku going forward from here.